Definition of EA, and its deadline. EA is a statement of remuneration prepared for all employees in the private sector by their employer. The EA must be rendered to the employees on or before the last day of February in the year immediately following the assessment year concerned. Are employers obligated to prepare the EA form? Yes, under subsection 83, 1A, of the Income Tax Act 1967, ITA, with effect from your assessment 2009, every employer shall, for each year, prepare and render the statement of remuneration to his employees on or before the last day of February in the year immediately following the assessment year concerned. Definition of employer, for the purpose of this return. If the employer is a company or a body of persons, manager or principal officer, partner and sole proprietor, they are deemed as an employer for the purpose of this return. Definition of gross income under EA form, Part B, 1, under paragraph 13, 1A, ITA 1967. Gross income from employment includes any wages, salary, remuneration, leave pay, overtime pay, fees, including director fees, commission, bonus, gratuity, perquisites or allowance, benefits in kind. From your assessment 2009, bonus or director's fee is treated as part of the gross income from employment. Any allowances which are exclusively reimbursements for expenditure incurred by the employee in the course of performing his duties are excluded. Definition of benefits in kind, BIK, under EA form, Part B, 2. Paragraph 13, 1B, ITA 1967, provides that BIK is part of the gross income provided to the employee by or on behalf of the employer, to be personally enjoyed by that employee. Benefits in kind, BIK, are not convertible into money, even though they have monetary value and they are generally taxable as gross income. Some examples of benefit in kind provided by an employer are a motor car, living accommodation, driver, household servant, gardener, recreational club membership. What are some BIKs, allowances, perquisites, gifts which are exempted from tax, and are not required to be declared in Part G of the EA form? In general, all BIKs received by an employee are taxable except for the following: medical and dental treatment, or childcare benefit for employee and immediate family; traditional medicine which are given by a registered medical practitioner, in accordance to the rules governing traditional medicine as laid down by the Ministry of Health; maternity expense, treatment of pregnancy or childbirth; cost of leave passage or vacation from employment, which includes cost of fares, meals and accommodation in Malaysia, of not more than 3 times per year for the employee and members of his immediate family. Goods at discounted prices, which is used by employee personally. The exemption is restricted to 1,000 ringgit. Services offered at discounted price, fully exempted, which is used only by the employee. Food and drinks provided free of charge. Free transportation between pick-up points or home and the place of work, to and from. Insurance premiums which are obligatory for foreign workers as a replacement to SOCSO contribution. Group insurance premium to cover workers in the event of an accident, personal accident insurance, and insurance for hospitalization and surgical. How do you determine the amount of BIK to be taken as gross income, and of which is taxable if the employer has provided a motor car and petrol for an employee for his private usage? A motor car which is provided to the employee is regarded to be used privately if it is used for traveling between the office and the employee's home, and it is kept at the employee's home, where the motor car can be used by the employee or his family at any time. There are 2 methods that may be used in determining the annual value of BIK on motor car and petrol. The methods are the formula method or the prescribed value method. Example 1. Alex is provided with a 2-year-old car valued at 100,000 ringgit by his employer. The cost of the car when new is 150,000 ringgit. The actual value of petrol is 1,800 ringgit. 1. The formula method, 80%. Cost of asset, actual, as benefit, divided by prescribed average lifespan, times 80% equals annual value of the benefit. Example, 100,000 ringgit divided by 8 years, x 80% equals 10,000 ringgit.